Hello everyone, good evening. I hope you all are doing great. We are back again on Form 7203. Last session we have discussed what do we understand by basis, and as promised, today we will discuss how to calculate this basis. Okay, and before I start my session, please comment, like, and subscribe so that I stay motivated and I keep on making more content on it. So, yeah, let's jump into how to calculate basis through Excel. So, before discussing a practical application of basis, let me tell you some items which we need to add up in our basis, which we call as increased stock basis. So, if a S corporation have ordinary business income, separately stated income like capital gains, tax exempt income, dividend, interest income, 1231 gain and loss, all these items you need to add up in your basis. Why? Because this income and everything, it's going to increase your investment, right? So these needs to be added into your basis. And one point I want to highlight here, if you guys have a question, that why tax exempt income is added in basis, because tax exempt income may be municipal bond, right? It's not taxed. So why we are adding this in the basis? Because if you have a tax exempted income, okay, and at the time of distribution you take out that income, it will be again taxed and your basis will be get affected. So we include tax exempt income while taking other increases so that it does not adding tax exempt income in the basis to avoid the double counting. Okay, so that at the time of distribution it is not taxed again. Your amount of basis comes appropriate. That's why. And what items we decreases in our basis? Non-deductible expenses, distributions, losses, charitable contributions, section 179 deduction. All these items we have to deduct from our basis because they are reducing my equity. Okay, and now how do we calculate the basis? So I have for a simplified way, I have just tried my best to explain through a diagram here. We have our beginning stock basis, then we add up all increases, which I already discussed, then decreases, then we apply distributions. This thing I'll explain in another slide. It's a important point here, distributions. Then we reach to our ending